All three major averages in the green this morning as Wall Street looks to build on a record-setting week. Now investors are face a packed week of economic data and Fed speak that could make or break some of that recent market momentum. So let's talk about it with Krishna Mamani. He's Lafayette College's Chief Investment Officer. Krishna, it's great to have you. So as we're speaking right now, we're getting some headlines crossing from Chicago Fed President Austin Goolsbee. He's talking about the fact that he at least believes rates are way above where anyone thinks neutral is. He also went on, though, to say that consumer spending remains very robust. Growth is strong. I'm curious just your reaction to that 50 basis point cut decision, and maybe ultimately, given the fact that the economy still seems to be resilient, what the odds are for another 50 basis point cut in November.
So I think I was expecting a 25 basis point cut rather than 50. But I would take 50 just as much as 25. The point is the level of rates is significantly higher than where it needs to be, given the slack that is developing in the labor market. And I think the Fed is convinced of that. And the person who probably would have opposed it the most, who made it clear that he didn't want 25, folded. That was Waller. So Goolsbee is probably the most dovish member, and you would expect him to say things like significantly higher level of rate cuts coming. The bottom line is the economy is in a good place. Rates are too high relative to where it needs to be. We will probably see continuous downtrend in Fed funds rates over the next 12 months. We are in a good spot in terms of the overall the dynamics of the market as a result.
Krishnan, do you begrudge the Fed for going 50 without a clear signal?
Well, so I think if they had gone 25 in July, they wouldn't have done 50. But because they didn't go 25, they can justify that 50. Powell was very clear about the fact that we should not expect more 50 cuts in the near future. Having said that, I think it is also clear that much the way that they pivoted from no cut in July to 50 in September, if you see significant downtrend in employment over the next few months, they will pivot just as hard for another 50. I don't expect it because I think the economy is doing well. But the point is they are on the case, and if the economy slows down, they will cut more. Inflationary pressures are not building up, so the upside is very limited in terms of rates. So I think overall, the situation for both the economy and the markets is pretty good.
Krishna, is the market maybe a little ahead of itself, at least at this point, just given the fact of the pricing right now and the optimism that we are going to get 50 at the next meeting?
Yeah, so I think the 50 at the next meeting is, given what we see in the data today, is very challenging. That is, if you have 3% GDP growth rate, which is where Atlanta Fed is kind of lining up, it's kind of and strength that you see in other real-time indicators. It's very difficult to see how employment rate is going to be meaningfully weaker, which is what you need. Having said that, we have seen the near-term data flip-flop over the last 6 months. There is a possibility. I don't assign a high probability. And if employment remains strong, expecting a 50 in the next meeting, I think is a bit unrealistic.